Wednesday, July 2nd, market analysis. Stan Ehrlich, good morning. 9:49 a.m. California time, about the middle of the trading day. 6:30 a.m. California time until 1 o'clock in the afternoon, the traditional trading hours. We have the stock market indexes. We start with the E-mini, and we go to a variety of futures markets, indexes, of course, energies, metals, grains, a variety of others, and some stocks. So we still have an overbought market in the stock indexes since the beginning of the week and earlier, starting actually Thursday last week. That does not mean the market's immediately going to top out. It is a warning that the market should, usually does, may, probably will top out soon, whatever that means. Not necessarily the same day you're overbought, but maybe a few days later, and overbought conditions or oversold conditions can last for several days, even a couple of weeks. End of February to the middle of March, oversold on the way down, finally turned around. But you need to wait for those reversal days, and we pinpoint them as best we can with the green bullish engulfings or red sell signals that are either at the highest high for the rallies or very close frequently, but we make mistakes and we get the heck out of the trade very quickly, lose very little when we're wrong. But when we're right, they are sometimes huge, long-term, multi-month turning points. But you don't see a multi-month high or low, but every several months or more. So picking those highest high and lowest lows to those time frames is not particularly easy, and that's what the ER signals does. Okay, we're a prime target here. Absolutely a great situation, including psychological stuff, for this market to top out, which it has not done yet. Maybe it's today, maybe it's tomorrow. It's right in front of a 3-day weekend. People tend to even up positions or get out of the market in front of long weekends. We have a higher high today than yesterday. We're overbought. And most importantly, we're right smack dab around the previous tops we had in November, December, January, and February. Major historical resistance. Pretty idealistic spot for it to turn down, to be honest with you. But it hasn't started yet, and it may not even happen. Be patient, watch for the signals, then do something about it. Next, we've got the 1-minute chart on the E-mini. Just made some new highs only 10 minutes ago, so I can't say anything bad or negative about this move so far. Spider, same thing. In new historic high ground now for a few days, but kind of running out of steam a little bit this week. Monday, Tuesday, Wednesday, we really haven't done any significant up or down one way or the other. At the moment, we're around the highs, definitely, or in new high ground, maybe, for the last 3 days. What about the SPY 1-minute chart? Just barely a new high ground by a very few number of ticks. What about the QQQ? Well, we're very close. We've been overbought for a few days. Not today, interestingly enough, at the moment. And we are in new historic high ground, but not quite the upside follow-through that you would expect, at least so far, from new historic highs. Normally, that kind of thing would have a very big up day or two, settle back down to support, which I still think is going to happen at a very bare minimum, which would be 541 and a little bit lower, 539. But there's a gap to close at 532.27. I can't ignore that. That's also a very probable downside retracement objective. And if we can get below 523, we've got something much more bearish coming if that happens. Next, QQQ. Close to new highs. What can I say? It's not turning down yet. Pretty much all the indexes. NASDAQ futures, still near the tops, high of the day, up nicely, close to a new high. We've been in new historical high ground slightly a day or two ago, but no follow-through. That's a little weird. And it pulled back slightly. So are we setting up for a big dip or a sizable correction? or something even more bearish than that, maybe. This is what you will see frequently at the very beginning. I don't know what's about to happen situation. It's not very clear to me at the moment. And the NASDAQ 1-minute chart. We're looking at overbought conditions still on the YM, the Dow, which is right there at a resistance line. Got a long ways to go before it sees new highs for the whole move. So all I can say is overbought, and a correction at this particular point seems to very likely. And here we go with the 1-minute chart on the YM. And it's dipping down a little bit. It made a new low for the session, true, but we really, really, really need to see it come down below yesterday's lows on all of these indexes. And most of them then all of a sudden will have a red bearish ER sell signal, but not yet. So the concept here is to put a sell stop below yesterday's lows and get short if it happens. So you're prepared in advance. But if the order gets filled and you do get short, you also have to have a plan for a protective buy stop, a stop loss order above the market so you don't lose much money if the trade doesn't work. Next, Russell. Tiny higher high than yesterday in a major resistance area, profoundly important resistance area. This one is one of the ones I think has the biggest chance of turning south quickly, but yesterday it tried. It had an outside day, but it had a higher close, so it wasn't red. It was red for an hour or two while it was lower than the previous day's low during the day, but it changed back to yellow because it got higher than the previous day's close, period. So I'm giving it a little more time, giving it a little more elbow room up, but I think we're close. Here's the 1-minute chart. Now bonds. Okay. I think I even mentioned yesterday, it's probably about time for it to have a minor dip. This is a little bit heavier than I thought, but we're holding above the trend line, which is still a little bit lower. And I'm not the biggest fan in the world about trend lines. They're very useful, but I love RSI, support and resistance, those two concepts much more than trend lines, but they're very usable. I mean, they define channels and patterns and breakout points and necklines and a variety of things. So pay attention to them. And let's see if it can hold above it. Otherwise, we might have a little bit more of a dip. Nothing particularly unique about this. Can't come up with any profound statements, frankly. 10-year notes dipping back into support. Minor new lows for a couple of days. Maybe we'll dip back down a little bit more. Crude. Up now nicely for the last week, but we had a huge reversal, top of the market, ER sell signal, fantastic. I told you before, sometimes these are fantastic signals. You just have to watch out when they don't work. Nothing works all the time. A little joke in the industry is, oh yeah, there is something that works all the time. You don't want to lose money in the market? Don't get involved. All right, we had a great buy signal at the bottom here back on April 9th. And another very good one, although it wasn't the lowest low, May 8th. So I'm still bearish, but I have to allow for a little bit more of a bounce. And we're seeing natural gas break out this week of a head and shoulder top. Quite a complex pattern, actually. Not going to go into too much detail. But the downside objective is 1.000. We had a new low for the move down yesterday. A new low close for the move yesterday. Not below the previous lows, but close. Bouncing a little today. The golden rule here is you're not supposed to close above the neckline, which is around 3.68 today. It goes up a little every day. So we have to stay below that in order to keep the pattern good. So if you get close to it, well, your risks are supposedly very small at that point. Right here, of course, they're a little bit larger, to say the least. But a little more rally is certainly plausible up to the neckline or maybe halfway. And then new lows probably next week. Next, heating oil. Nice rally for a couple of days. Crude might do the same thing. But I don't have any problem with this at the moment. I still think it's going to make new lows, so the trend down below 2.2 probably next week. Next, we've got gold, silver, platinum, copper. Well, gold has popped up yesterday a little bit out of oversold conditions when it tested a support line. No shock. Told you it might bounce off of the line. Didn't have a reversal, unfortunately. Couldn't scream bloody murder by it. I only warned you of a little rally. But we are, unfortunately, between a rock and a hard spot at the moment. We have a lot of resistance at 34.73 and some very decent support at 32.34. So until we break out of that and or I get some major signals, meaning, of course, red or green bars on the daily charts for ER buy or sell signals, ER signals, I have to be, bouncing back and forth. Sort of the same thing here in silver, but there is a chance, a chance that this is a head and shoulder top. I don't like the neckline. It slants downward more than I would like, but the pattern is very symmetrical. All the body parts are there. There's nothing really wrong with it. I don't like it rallying here yesterday and today, but it doesn't kill the formation. Now, it will kill it if it goes too much sideways, too many days, and I would say probably I'll give it next week at the most. So before the end of next week, I either expect it to fail and rally up above 37.20 at 12, which would kill the pattern, and then we'd be back to sideways to higher trending, or start to break down, maybe break out of the formation to the downside, and then we'll have a move forecasted. Wait a minute. Oh, I've already got it measured. That's good. To approximately 33.25. That's it. Next. Oh, almost a new high for the trend on platinum. That's a surprise. I didn't expect it to get up that far this quick. I thought we would have a little bit more of a downside correction to support first. Well, the trend is up. I have no major sell signals lately. This one did not work. Well, it actually did work for about half a day. There was some scalping money involved that would work, automated by 100%. I don't show you guys in this YouTube because it's a little complicated and it would take me a while to do it. To explain it decently, at least maybe an hour. If you're interested in that kind of thing, contact me. At this point, let's see if it can close above the highs of Friday of last week and Monday of this week, which is kind of like the same prices. And it just topped out today, almost exactly the same number. So now we're building up a little resistance here at 1439 and a tick or two. So if it closes above that, it'll probably jump quite a bit. We're not overbought again yet. We do have divergences, higher highs a couple of times, but the indicator did not make the higher highs. So be careful here. This could be a very low risk new short sale, but I just can't tell you that because I'm not seeing any weakness. Next, high grade copper, new highs, new high close likely, looking pretty good. But guess what? We're yellow, we're overbought. Last 5 days, including today, I think it's about to start to turn down. I can't say is at the high right now. Looks like it's going to move up a bit more, but probably very soon and very close in price. Coming back down to support more likely than not, which would be down to 5.00 or a little bit under. Let's call it a week or two. Next, we've got a very strong day in soybeans. Now, ladies and gentlemen, we've got some interesting stuff going on in grain complex. We bought the low day with an ER buy signal that's green, June 27th, came up the next day okay, threatened the situation at the low of the day yesterday, but closed unchanged, and now up very strongly today, looking much, much better. This is way, way important. The reason is, if this rally can continue and break above 1075, then in my opinion, the likelihood of this thing getting much stronger, much longer term has accelerated greatly. A close above 1075, I think will be up to 11 plus awful damn quickly. And if that happens, we will probably be breaking the neckline on a head and shoulder bottom that has taken almost one full year, a very sizable pattern, to develop, and then the upside objective would be 1230. Now, let's call it 1240. You know, give or take a couple of pennies. It's not going to matter at this point when we're down at 1044. You're looking at a huge move on the upside, but it may have just started. Maybe. I want to have a close, need to have a close above 1275 in order to get much more excited about this. So far, that resistance level has stopped last couple of months, each time it's up there. Now, soybean oil has already started something like that. We did have a false breakout May 14th, dropped all the way back down to the pattern a lot. It is a double shoulder, head and shoulder bottom, and it's taken over a year, more like a year and a half, I think, for it to develop. We now gapped across the neckline just a week or two ago on June 16th. Yep, classic bullish breakout on a head and shoulder bottom. Came up, we got a sell signal at the high of the rally, came down for 3 or 4 days, good signal, good trade, made some very good money, and now it has tested the neckline pretty accurately. A little bit above is fine. Almost closed the gap as well, not quite completely, and turned into a new strong rally yesterday and today. So it is acting right out of a textbook extremely nicely. The minimum upside objective on this, and I said minimum, 62.60. And we're at 54.92 at the moment. Next, we've got corn. Soybean meal, having a new low for the trend, but we're oversold. 2 days ago, we had a bullish engulfing ER buy signal, didn't work. Market made new lows the next day, stopped out with a small loss. The scalp trade for this green signal probably did make a little money. Can't tell from looking at the daily chart. I need to look at a 1 minute chart with the same strategy running. But again, I don't have time for that in this short 20-minute, 30-minute YouTube I've been doing for 2.5 years now. Something like that, every day. Here's what's going to happen. It looks to me like we could get some more strength. It doesn't need much more. If we get above yesterday's high, which is only 275, well, let's call it 276. Yesterday's high was exactly 276.10. You get up to 276.20, you're going to have a green bullish engulfing ER buy signal. Almost positively going to keep it for the day because yesterday's close is way down there. And once we get above yesterday's high, all I have to do is stay higher than yesterday's close to keep the green. This could be a low day. This could be the low day for a long time to come. Maybe. Too soon to say that, but I did. But it hasn't happened yet. We got to get above yesterday's high, period. Next, we have a corn chart daily, new low for the move yesterday, not oversold, a little bit of divergence on the bottom, new low in price, but not on the indicator. So we've got a slight new high for a week. Nice. It doesn't mean it's going to go straight up for years. It just means to me, because I'm lacking a signal, that we're probably going to come back up to resistance and see what happens at 423. I like that. It's not that big a rally, and I don't have any significant reason to give you a zip, pop, bang, whopping bullish opinion. One thing that does come to mind is, remember, we had a major low on August of last year. This is July. It's only 11 months ago. And that constitutes a potential broad double bottom. But we're so close yesterday to the lowest lows of the move that this is a way premature kind of statement. But I've been doing this over half a century, and I see these things as they are developing, or even before they develop. So I have to mention something about it, or you won't believe I saw it unless I say something early. So I like the double bottom idea, and I like the rally up to resistance. But getting way up at the moment, just because of what it's doing at the moment, I cannot justify that right now. Nice rally also in wheat. Support basically held, not very accurately. And that's about the best I can say. Maybe it's going to come back up again to 583. Wouldn't be a damn bit surprised. It's already like halfway up there. But once we get there, can it get back up, make new highs for a few months? Then we're talking about a longer term trend starting. What about Shell? This is the four stocks I follow at resistance right now. Maybe it'll pop through. Trend is up since April when we did get a buy signal on the exact low day. I'm sure I said something about it if I had been plotting, showing you this symbol at that time. I'm not sure when I started showing you this. But anyway, it's there. And you know I would have said something. And we have a sell signal recently that I did say something about, and it did come down to support, and it did close the gap. It came down a bit lower, a little dramatically, but closed at the top of the support area and then started to work its way higher. So I'm friendly, I'm bullish. The effects of the sell signal have come and gone, only lasted a couple of days. I don't think we're going to turn around and start a bear trend here. I have to mention, it does somewhat depend upon what the overall stock market does. Now, you understand that just because the stock market turns into a bear trend, and I'm not saying it will, it doesn't mean every stock, of which there are about 11,400 of them in the major exchanges in the United States right now, will be in a bear trend. There are some, not very many, that will be in a bull trend, even though we're in a bear market. So I don't know if this is one of them or not. I don't care. I just follow the way the markets move. I'm a technical analyst, not a fundamentalist. Sorry. Next, we have a rally into resistance like I was hoping for in Apple. Now, right now, that could be it. I said we might get to resistance. We did it today. We're overbought for 2 days in a row. That's another reason to believe that we might start to dip back down some. I'm not getting bearish. I'm just looking for a dip back down to about 198 and maybe 195, 193.70. And the trend line, you got to pay attention to that. Could come down a couple of days to 199. It's all in the same ballpark zone, the 190s at 200 or a little under, put it that way. A few days from now, a week, maybe a little longer, but not much. And then who knows? Back up again? Maybe. Tesla came up this morning, closed the gap almost exactly. We needed to touch the low of 2 days ago, which was 316.60. Today's high is 316.83. Oh, gee, 23 cents higher than needed. Close the gap. Now it's languishing around in the gap. I suppose it could turn right back down again and come down to support. I would not be a darn bit surprised. As a matter of fact, I'll give that a slightly weighted statement. I'm 60%, so to speak, likely to think that's true. But I'm not sure. This thing could still stay here and then even go up some more. I'm not very confident about this. So we'll see. Now, NVIDIA. Sharp rally. Back up toward highs. Not overbought yet. Trend is definitely up. We tried to come down and close a couple of gaps, but didn't do it yet. So there's still a chance that it could fail up here again like it did a couple of days ago. Resistance area. And turn down. Love it. Well, we'll see how this goes. You guys have a great day and profitable trading to you.